Hi, I am Anna. I come from www.ntvforex.com. US dollars slides across the board as gold and silver prices surge. http ntvforex.com news ID 833C88 7/22/2025 10:45 am. European markets enjoyed a fairly solid session yesterday, with the German DAX hitting a new 5-month high. However, the progress proved to be hard to sustain, with the DAX, CAC 40 and FTSE 100 all closing well off from their intraday highs. The early optimism that came about as a result of yesterday's eventual agreement on a new EU budget, as well as the makeup of the new pandemic recovery program, soon gave way to the reality that the distribution of any funds still remains some way off. Despite the skepticism, and there is plenty to go around, yesterday's agreement does appear to break a previously important taboo, which is the creation of some form of common debt. Netherlands Prime Minister Mark Rutte may claim that this deal is a one-off, however history has taught us that there is no such thing where the EU is concerned. This realization may well make getting the agreement through the respective member state parliaments a little tricky, as well as offering some pause for thought. It is also hard to ignore the fact that the amounts in the recovery fund are small. Indeed, a combined 390 billion in grants to the likes of Spain, Italy, and Greece, as well as Eastern European countries over 3 to 4 years, is almost inconsequential when compared to the huge 1 trillion stimulus Germany package has provided for its own economy alone. The German plans, which amount to 30% of GDP, include various tax cuts, as well as significant amounts of state aid, and grants for electric vehicles and renewable energy. In comparison, yesterday's rescue deal is tiny, and could be argued that it's the monetary equivalent of flipping a coin into a begging bowl, as far as Southern Europe is concerned. Despite this, the US dollar has had a disappointing 24 hours, losing ground across the board, with the Australian dollar the main beneficiary, as a result of a strong move higher in commodity prices, with gold, silver, and copper all pushing higher. Gold prices hit a new 9-year high, while silver prices hit a fresh 6-year high. The greenback also slid against the euro, pushing below its June lows, and heading back towards the lows last seen in March. US markets closed well off their intraday highs as anticipation continues to grow about a new coronavirus stimulus package from US lawmakers, with talk of further stimulus checks in any new relief package. The slide off the highs appears to have come about as a result of skepticism from Senate Republican leader Mitch McConnell that suggested another stimulus bill, while being discussed, is unlikely to be passed by the end of next week, and this slide has manifested itself into some weakness in Asia markets this morning and looks set to see markets here in Europe also open lower. EUR/USD continues to track higher and looks set to close in on the 2019 peaks at 1.1570, as well as the 1.1600 level, which is 50% retracement of the 1.2555-1.0635 down move. DIPs should be contained to the 1.1370 level and last week's breakout level. GBP/USD continues to track higher, closing back in on the 61.8% Fibonacci retracement of the 1.3600-1.1412 down move at 1.2770, as well as the June highs at 1.2815. Support comes in at the 1.2500 level and last week's lows. EUR/GBP found support at the 0.9000 area yesterday, just above the 50-day MA at 0.8980. While above this key support, the risk of a return to last week's peak at 0.9135. While below the 0.9135 area, the risk remains for a slide back below the 50-day MA towards 0.8920. USD/JPY currently has fairly solid support down near the 106.50 area, and resistance up near 107.50, as well as cloud resistance at the 108.00 level. FTSE 100 is expected to open 14 points lower at 6,255. DAX is expected to open 45 points lower at 13,127. CAC 40 is expected to open 19 points lower at 5,085. Subscribe our channel to receive the news as soon as possible. Thank you for watching.